Hello, what's up guys, and this is Kevin from cryptoguynews.com, and this is the introduction of technical analysis. So in this series of videos I'm going to teach you about technical analysis, and you'll find that technical analysis is a kind of a must-have knowledge when you want to trade or invest into cryptocurrency or stock market. But in this channel we are talking about the cryptocurrency, so I'm going to show you how technical analysis will help you trade crypto like a pro. So this is an introduction. And what is technical analysis? Technical analysis is a tool or method used to predict the probable future price movement of a commodity. And when I say commodity, I mean stock or cryptocurrency, based on the market data. So what happens here is you use the technical analysis to predict the probable price movement, whether the price will go high or whether the price will go low, so that you can decide whether you want to invest or trade crypto based on the market data, what you have seen in the past. And it is basically the process of using previous market data in order to predict the future price movement of a particular stock or crypto. And why should we use technical analysis? Technical analysis can help you make more informed decisions while trading. So you can decide, or you can figure out the price of a coin before you make an informed decision whether you want to hold the coin or you want to trade it. And the more simple an indicator is, the more effective and clearer it becomes. So if you have a knowledge of technical analysis, you can find the simple indicators so that they can be effective and clearer to you to make an informed decision whether to trade or to invest. So the price and volume of the two most important indicators of the market activities. So the price of the coin and the volume that is in the public domain are the most important indicators of the market activity. So you have to know the price of the coin and you have the overall volume of the coin for you to have a good technical analysis to make an informed decision. So why should you do some technical analysis? We do technical analysis to invest or trade in a cryptocurrency. So if we want to invest, you should know that investing is holding a coin for over 6 months. So if I want to hold a coin like Bitcoin for over 6 months, as per now the price of Bitcoin is like $25,000. So if I hold the Bitcoin for over 6 months, let's say 6 months to 1 year, then the price of Bitcoin would have gone up. Okay, so holding it, if I decided to buy like 1 Bitcoin today and the price goes up in 6 and above months, the price will be like $100,000. So I bought the price, I bought the coin or the Bitcoin at the price of $25,000, and in the span of like 2 years to 5 years, the price would be like $10,000. So that is a massive profit that I would have made by investing in the cryptocurrency. So it is holding a coin for over 6 months to gain some profit when the price goes high, because the price of Bitcoin, according to the news that are in the public domain, it is said that in the near future, like 10 years to come, the price of Bitcoin would be more than $100,000 for one Bitcoin. So if I buy one Bitcoin now at $25,000, then in like 10 years or 5 years, it will be $10,000 to $100,000. So I will have accumulated a massive profit on the coin. So, and another thing you should know by investing in cryptocurrency is it is highly risky. Like if you invest in a newly introduced startup coin, then it can be highly risky. Let's take, for example, I put like $100,000 in like Luna. For those who don't know, Luna, Luna collapsed. Okay, so the price was above $50, and it was just close to $100, and then the price of Luna collapsed to zero. Okay, and it was actually in the public domain. You can go and read that. You can go and search, Google that, the price of Luna, and you'll find that at one time it was between $50 to $100. And then with time, the price of Luna collapsed to zero. Okay, and then they created another Luna, which it is now called Lunk, and another one is called Luna 2.0. That is what I'm saying here. It is highly risky. If you invest like in that kind of a coin, then when the price goes down to zero and you invest like over $10,000 or even $1,000, then you will have some losses. So that is not also the risk on investing. So if you want to invest into cryptocurrency, just invest to the two common coins, which is Bitcoin and Ethereum, and these two cannot go wrong with you. Just don't you can also do your own research on the coins that you want to invest in, and you can also read more and more about the coins that you want to invest in, so that if the price, or if the coin or people behind the coin is doing something that is, you see, that may go for a long time, then you can invest into that coin. And now the third thing that brings the investing is it saves time. The investing in cryptocurrency saves times in that you don't have to do some more and more technical analysis on a coin before you invest in. You just jump in and you wait for the coin to go high so that you can have some profit. And another thing that we do some technical analysis is trading. Trading is a short-term buying and selling. So I may decide that I want to trade in the same Bitcoin, as an example, that I want to trade in Bitcoin. So I'll just buy Bitcoin at low price. Let's say like I buy it here at low price, and when it goes up, I sell it, and then I buy it now low again, and when it goes up, I sell it. So that will be called trading Bitcoin. So it will not be investing, because investing, I can buy it here and then wait for over 6 months, and then when it reaches somewhere here, and then I sell it. Okay, so that is now trading. Trading is you buy in a short term, you buy and sell crypto on a daily basis, or even on a weekly basis, for low, and then you sell high, and then you buy low, and then you sell high, because the price of the coin movement is normally up and down. It doesn't go up as a straight line. it goes ups and down, ups and down. So you buy when the price is down, and you sell when the price is up, and that trend continues. That will call trading. It is lower risk because you are not holding a coin for quite some time, because if it's a new investment, then you can jump in. But if you see that the coin is going lower and lower, then you can jump out. So it is basically pump and dump. So if you have heard of that terminology, you pump your money, and then when the price goes up, you pump your money, and when the price is going down, then you dump the coin. Okay, so that you can have some profits in between the pumping and dumping. Okay, it's also time consuming because you have to do some thorough technical analysis to know whether the coin will go up or will go down. So that is the difference between investing and trading cryptocurrency. So if you're new to this channel, please click the subscribe button and turn on the notification bell, because you will be informed when we release the part 2 of the technical analysis. As I said earlier, this is a series of videos that will help you understand the term technical analysis, so that you can do some trading or investing in cryptocurrency professionally. Okay, so click the subscribe button and turn on the notification bell. See you in the next video.